Well, hello everybody, and you're all super welcome to today's episode of the ESG and Tech Show. My name is Susan HayesCulleton, and I am your host for this show and indeed for this episode, and it brings me great delight to be here with you today when we're going to talk about SPACs. Now, SPACs are a theme that have been reaching more and more newspaper headlines. They also are responsible for quite a lot of stock market activity over the past year in particular. They have been going through a huge amount of growth, both in terms of amounts, as well as in terms of numbers of SPACs, as well as in terms of percentage change in value. And of course, right here at VectorVest, they have also been increasingly being analysed in number as well. So that was why I felt that we should really take a look at this theme very, very soon, and I chose today to be that day. So first of all, I am going to ask you, will you please pop there into the chat and tell me where you are tuning in from. This is always something that I like to do just to see where everyone is at. And as you can see here, the reason I'm looking over here is because that's where my phone is, and I'm going to be able to see here who is tuning in and from where, and all of your various different questions, etc. So while you're doing that, I'm just going to give you a little bit of background on the show. So as I say, my name is Susan, and I have been presenting the ESG and Tech Show now for some time because I felt it was very important to consider and understand and get a sense of what was going on in the world relating to two of the biggest trends that are happening today. One of those is, of course, sustainability, and one of those is technology. And I have a huge interest in both. I think that there is a lot that is going on in the world when we look at the growth of, let's say, cloud computing or artificial intelligence, or a variety of other things, a variety of other technological developments that we're seeing across the board. And over the past number of episodes, I have looked at, for example, the future of public transport. I have also looked at the fastest growing ETFs in this area. I have looked at a variety of other areas like that where we can get an understanding of how technological impacts are changing the world. And then also from a sustainability point of view, we're seeing a big growth now in the demand of ESG assets for people to invest in, where there is a realization that if you can put sustainability with a good commercial opportunity together, is that it's actually there in the middle of those two is where the sweet spot is now for where investors want to invest. So when we look at sustainability, we look at how green, for example, public transport will be. Where are the niches within the ESG sector that ETF in assets are being invested, and a variety of other things besides that. So today I wanted to bring SPACs to the fore, and as I say, I'm checking out here, keeping a good eye on the chat. So please do keep your comments coming in, keep your questions coming in. Let me know where you are. Let me know what's going on in your part of the world, and let's keep this super interactive. Of course, while everybody is here joining me live on YouTube right now, you may be looking at this on YouTube when it's not live. And if so, please feel free to put comments there into the comment section and we'll take a look. Hello, Robert. Robert is joining us from Mandeville in LA, Mandeville, Louisiana. So you're super welcome indeed, Robert. And as I say, keep your questions and your locations, etc. coming along as we go. And of course, if you would like to, I also have my Twitter is open over here. So if you take a look there at VectorVest on Twitter, or indeed VectorVest on Instagram, I'm keeping an eye on those too. So hello there to Sky, hello Gary, hello indeed to you all. And as I say, pop in your locations. I always love seeing where people are tuning in from. So I see we have somebody joining us today from Hartford, Connecticut. I've only ever flown through there. Hello indeed, Hustler 3000, hello. And also, yes, I see that there's lots of people now saying hello. So as I say, please do pop in as well. We have somebody here. John is from Clinton in New Jersey as well. Brilliant. Minneapolis as well. We have somebody here who's joining us from Canada. Sydney, Ohio. Lior from Israel. Florida, Gary is. Brilliant. Okay, well, keep them coming. Keep them coming indeed. And I have both a post and I also have a story up on Instagram as well. So I'm going to keep an eye on all of those. I'm just making sure now that I can keep an eye on all of those, because of course we do want to make sure that we hear everybody as you go along. Hello from San Francisco, California, Northern Virginia, Savannah in Georgia. Tom says hello here. Cincinnati, St. Louis in Missouri, Akbar from Virginia, Montana, Vancouver. Okay, brilliant. Seems that we have a lot of American and Canadians here today. You're all super welcome. And wherever you join from, you are super welcome indeed. Now what I'm going to do is I'm going to take you through what we're going to discuss today and why we're going to discuss what we're going to discuss. Right. So in my research for the show and generally speaking to people about this theme in general, what I seem to find is that people are slightly cynical of this, and with good reason, I understand. People are slightly cynical of this theme because they feel that the world was burned by the previous blank check company from the 90s, and as I say, with good reason, I can completely understand why. And just to give you some, some pretty well, not very nice statistics about this, but it back in the 90s, we had blank check companies at that stage that weren't very well regulated. It led to a lot of penny stock fraud, and it also led to losing about $2 billion a year by the early 90s. Now, billions of dollars in the early 90s is, of course, 30 years ago. So billions back then meant more than they did today. So you can understand why the world is cynical about them. So what I want to do particularly is that I want to take you through the regulatory changes very briefly, but just to point out the differences in between the two. Another reason, just going to check over here before I go on here, is that Joe says New Jersey. Gary asks me my opinion about DWAC. Yeah, I thought somebody would come up with that. That is, of course, the Trump SPAC. So we're going to talk about that as well, Gary. So make sure and stay tuned. Mark, I see here that you're joining us from Pennsylvania. Wonderful. So as I say, keep them coming, keep the comments coming, keep the chat coming, keep everything coming along the way. Okay. The second reason that I see an awful lot of cynicism is because there's a lot of growth. Now, and I get that. Generally, if there's an awful lot of growth around a certain topic in the financial markets, we can feel, is this a bubble that is about to burst? So what I'm going to do is I'm actually going to take you through the growth. I'm going to show you the analytics on how this team has been developing. But I also am going to start off from the very beginning by explaining exactly how this market works, because I think that's important. And I'm also going to talk to you about how we look at the analytics. It's not just as simple as saying, oh, there's been, lots of growth and I put a number beside it in SPACs this year. In the case of SPACs, you do need to add a little bit more nuance in there to explain exactly what's going on. Okay, so I'm going to tackle the cynicism. Now, right here at VectorVest, it's not that I'm putting forward a view that SPACs are wonderful or that SPACs are awful. What I'm doing is that I want to show you the facts and I want to show you how they work. And then what I'm going to do is I'm going to take you through how VectorVest analyzes them. That's what's going to happen next. So I'm going to take you through exactly on the system how you can analyze a SPAC and how you can do it if you are a subscriber or if you're not a subscriber. Naturally, if you are a subscriber, you'll be able to get access to a lot more information. But I do certainly want to give you ways in which that you can engage with us even if you're not. So for all of you who are joining, you're most welcome, whether you're part of an existing VectorVest community or not. Then, after we do that, I think it's very important in the context of ESG and tech I think it is really important as well that we go through what is going on from a technological and an ESG point of view. So what types of tech are SPACs investing in? And similarly, the same from an ESG point of view. So I'm going to bring you some insights in both of those. And let me see, what else have we got going on here? So Taylor, Torielli is here from California. Earl is here from New Jersey. Darth asked me my opinion on OCGN. Hustler asked about BRPM. Albert Riviera asks, what's your opinion about FAZE? John asks about AMRS. Okay, and we're going to go through all of those. We're going to create a watch list and we're going to take a look at all of those. We're going to take a look at them fundamentally from a cash flow point of view, and then we're also going to take a look at them from a technical point of view as well. Okay, so we have a really action-packed show. As always, if you like what you see, please do press the like button. I would really love if you could press the like button. It always helps for when people afterwards want to see, if they're looking up this type of content, that they'll be able to see what's going on. And of course, it's also important that everybody knows is that while we are recording this live today, that the information that I'm going to share with you is very practical, so that then you can top up your knowledge or get market updates arising from the resources that I'm going to share with you today as well. So Donald says hello from Canada. William, hello, and you are very welcome. Great to see that you're as active as you are on the chat today. All right, so let's take it from the top. So like I said, the two elements of cynicism that I see are, number one is that blank check companies, and I know I say that really exaggeratedly. The reason I do that is that it's kind of a hard term to say without getting it wrong. So a blank check company of the early 90s, as I say, was very unregulated. SPACs are far more regulated. And also, of course, the other thing that has happened, which is a really important deal, and I mean that in the literal sense of the word, is that now if you invest in a SPAC, and we're going to talk through how you can withdraw your money before the SPAC talks about doing a deal with a target. You might say, what's a target? What's a SPAC? What's all this about? And that's where we're going to go to now. Okay. So I see Stephen here is in Australia. Okay, wonderful. That's great. You're very, very welcome indeed, Stephen. William is here from Pennsylvania. Hello indeed. And as I say, you're all very welcome. Right, now I'm going to start off by showing you an infographic. I always find these are really, really useful. So let me just pop on over here. Here we are. Okay, here is an infographic about how SPACs work. So I'm going to scroll right in, okay? I'm going to scroll right in, and this infographic actually does a great job. So first of all, what is a SPAC, okay? So if you just go up there right at the top, so it's a special purpose acquisition core or company, okay? So here's the way this works. So a SPAC starts off with somebody or a company who decides, okay, I am going to form a SPAC. And then what they're going to do is they're going to launch a company. They file it to go public, and then they go on a roadshow to find investors. Now, Emma, if we're going to call Emma a person, of course, Emma is probably in a company. By the way, hello Meta, you're very welcome from Ontario, Canada. Emma has decided to launch MCore, and she files, as I say, to go public and go on a roadshow. You can't just do this one day. It probably will take Emma maybe $6, $8, $10 million in order to take step two. And what happens there is that she will have to go to professional services specialists in order to be able to set it up in the first place. That would include solicitors, and lawyers, accountants, auditors, etc. Because you are going to be dealing with other people's money, and you are going through an actual filing process. So that's what Emma puts in at the beginning. She puts in time and effort and money. Wherever she gets the money, she has to get money in order to go into this, and then from there we'll make a decision about moving forward. Okay, so over here then we have investors. Oh dear, right, there we go. There we have investors. Okay, so now we go up here, over here to number 3. So investors buy MCore units for $10 each, right? So that typically would be the price that often can come about. This tends to be more so cultural than legal, but let's say that investors buy MCore for $10 each. Hello Diane, who's joining in here from Quebec in Canada. Great, lots of people here today from Canada, which is super. So now, in addition, you might say, well, before we go any further, what has Emma got out of this? Well, Emma intends, of course, to make money out of this, but she will have to wait until her work comes to fruition. But up front, what she's expecting to do, generally, is that she would be buying 20% of the shares at a nominal price. Okay, so she would be buying 20% of all of the shares of the SPAC at a nominal price. All other investors then, let's say, are going to buy the units for about $10 each. Okay? Okay, Emma's a busy lady. Right, so then what happens is MCore SPAC goes public, for example, on the New York Stock Exchange, and Emma keeps 20% of the shares, like I say. So she's now raised the money, and of course, she's now gone public, so then people can buy and sell the shares. And of course, I'm going to be taking you through a range. I have 81 SPACs on that I'm going to show you. I'm going to take you through here for VectorVest subscribers. Those of you who are not VectorVest subscribers, and those of you who are particularly asking for opinions on certain ones here, I'm going to show you how to do that also. But so now it's gone public, and the next thing, and here is Emma's key work, is now Emma has to search for target company to acquire. Now, the likelihood is, of course, is that when she has been on the roadshow, she has also, like, people just don't say, oh yeah, here, take my money. You know, there has to be an actual rationale for what Emma wants to do. People are buying into Emma's capability to buy a target that is worthwhile, to buy a target company that she can subsequently see that there is growth from and that there will be growth in the future. That is Emma's plan. Okay, so anyway, let's say then Emma does find a company, and so she finds a company and she calls this, let's say the company is called Startup Co. And again, I'm going to take you through a range of different SPACs that have raised the money but are looking for targets. I'm going to talk you through how many of those are, what types of companies they're looking for, etc. So she decides on a company and then she negotiates the acquisition terms, right? So that's what happens next. Okay. Now, this is the part where it changes relative to what would have happened with blank check company, is now shareholders vote and agree to buy the company. Okay, so that's also a big difference. Is this, like, Emma can choose whatever company she wants to target, but the shareholders have to actually vote and to agree to buy the company in question. That's what has to happen next. Then after that, MCOR buys the company with the money from its own respective IPO, and then there is additional funding from new investors. So that's called PIPE, P-I-P-E. So you're likely to come across PIPE as well, which is private investment in public equity. So she also, as you can see here, MCOR buys the company with money from its IPO and additional funding from new investors. And then over here you can see eventually Startup Co merges then with MCOR and officially trades on the New York Stock Exchange. So what many people are describing SPACs as is basically a shorter route in order to get towards an IPO. Is that instead of Startup Co having to go through the whole IPO process itself, is that it's basically, you know, levering in through all of the work and the money and the time and the professional services that Emma has put in along the way. So that is how a special purpose acquisition company actually works. Okay, so let me just recap very briefly on that. So the SPAC itself is the equivalent of the blank check company of the 90s. That is what they are. So it's the equivalent of that. It's where you are investing in Emma's capability to actually find a stock. Sorry, to find a target company. That's what you're investing in. Do you have to agree with Emma when it comes to it? No, you don't, because of course, like I mentioned down here in step 7 over here, is that shareholders do have to vote and agree. They can also withdraw their money beforehand. Again, I'll talk to you about the actual mechanics of that and the statistics around how many of them do that as well. In addition, then we also have over here, why would Emma bother to do this, is because she keeps 20% of the shares. So as you can imagine, when MCOR buys the company with the money from its IPO and additional funding, typically, or in addition, PIPE as well, funding from the new investors, then of course she can redeem those 20% of the shares at a much higher level than the amount of money that she puts in. Some people, by the way, also call this a reverse merger. Okay, so rather than two companies merging and then raising money, or rather than one buying the other and then that being the merger, is ultimately what happens here is that the company is built to buy. It's built to buy. So it goes onto the stock market through the IPO process with a view to finding its target to buy. So that's sometimes as well a reason that people call it a reverse merger. Or the company is built, okay, so it goes onto the stock market with a view to buying this, but ultimately this company then becomes that which actually is listed through the process along the way. Okay, so before I go on, how does all that sound to you? Hello, Kayla. Kayla is joining us from North Carolina. How does all of that sound to you? Let's just hear from your point of view, how does all of that sound to you? Any questions about how the SPAC process works? Have I explained it clearly enough? And of course, I know what some of you might be asking me as well is, where can I get access to this infographic? So, okay, great. So Stephen says, will you be explaining units and warrants as it relates to SPACs? Yes, I will, Stephen. And I'm going to be particularly talking about this in between steps 7 and 8, okay? Because it's in between here. So actually, just give me I'm going to do this right now. Regents is very clear. Thanks. Super. So let's just say that at this stage is that shareholders in the majority decide to go ahead and buy Startup Co. But a minority of shareholders are not happy. They are not happy with this. So actually what happens is they want to go. Well, what they can do is they can actually withdraw their money at this stage. They can redeem the money that they put in, and ultimately then that becomes the return that they get is simply an interest rate. Now, of course, as you know, risk-free interest rates at the moment are very low, so that the amount of interest generated as a result of this may not be massive, okay? And I am going to talk through in a little bit more detail on that at a later stage. But the other thing as well is that, remember back up here, investors buy MCOR units for $10 each. Well, perhaps, in fact, instead, what Emma decides to do is that she says, the thing is that if people want to buy now, they can buy for $10, but maybe what they want to do is that they want to be able to pay for this a little bit later on when they decide on what the target company is. So maybe what they want to do is commit to paying for these shares, but just not today. Well, first of all, Emma is not going to be hanging around, is she? Emma's going to say, okay, well, you know, I'll come back to you in 6 months' time and then let's see. What Emma can do instead is MCOR can then offer a warrant, and a warrant is different to an option. So just stick with me, just in case you think it's the same. The theory is similar, but the practicality is different. So what she does is Emma says, okay, so you see these investors up here? They don't want to buy units right now. Instead, what they want to do is they want to be able to buy them in the future. Okay, so they do want to buy them in the future, but they want to have a choice as regards whether they're going to buy them or not. So a warrant is then an agreement directly between the owner, which in this case would be MCOR, and the person in question or the people in question, whereby, for example, MCOR might say, well, you can buy them at $11.50 a share instead in the future. And the reason that it would cost more at that point is because some of the uncertainty would have been taken care of by now. The target, for example, the target would have been picked, the deal would be done, the date would be done, the process of how this works would be done, and there would be far more understanding. And of course, the other thing is that the amount of money that has been invested would be far more clear. So warrants can also happen in that way. A warrant can happen from the buy side, and that would be directly between Emma or MCOR and the people in question. Then, of course, there's also warrants on the sell side also, as I say, where people can withdraw their money as well down here. And let me see over here. By the way, just to talk about the differences, because you might say, okay, the 1150 one, isn't that a call option? No, it's not a call option. If you don't know what a call option is, don't worry. I'm not going to go into great detail of explaining it because it doesn't really add an awful lot to the story. But what it does do is just, for those of you who are familiar with call options, I just want to distinguish the difference between the two. Two things. Number one is a call option. If I was to buy a call option on a stock, I could buy the call option now. It's 11:24 Eastern time, for example, and then I could literally click my fingers and then I could sell it again, right? So it's liquid, which means that there's a secondary market. It's easy for us to buy and sell them in between each other. You can't do that with a warrant. It is between it's a private transaction ultimately between two people. You can't, or two different parties. You can't just sell them off. So the first thing is that they're liquid, and number two, they're liquid in a secondary marketplace. And number two, relatedly, is that a warrant is an agreement between the security asset owner and another party or person or company. And so therefore you can't just sell it on to somebody else or ask an intermediate party to be in between. So Stephen, I hope that sorts out the question that you were asking there about explaining units and warrants as we go along. Okay, now, so that is a SPAC. That is how it works. That is who is involved. Well, sorry, one last thing. The three parties involved. So over here we have the sponsor. The sponsor over here is MCOR. The sponsor, what they want to do is they want to be able to invest in a promising target. What they want to do is they want to develop an idea. Maybe it's one that's very interesting to them, or maybe it's something where they see a lot of growth potential, etc. And what they want to do is raise the money with a view to holding on to 20% of the shares for themselves and then moving on and being able to put that into the market. They do, like I mentioned, they do have a lot of upfront costs in order to set this up. So that is going to be their investment of hard cash as well as their time. And also, of course, they're in a very, very influential position about choosing the target, engaging with the target, negotiating the terms, shepherding the target and the investors and themselves through the process, and keep people engaged right along the way. So that's why Emma's doing what she's doing, as well as, of course, to have to have a commercial outcome. Stephen says that's a good explanation. Thank you, Stephen. Okay, so what do the investors want? Well, of course, the investors want early access to these companies. And again, I'm going to move on very shortly, and I'm going to take you through the analytics, and I'm going to particularly point out to you the amount of growth that's in this area, and not just the amount of growth like year over year, but I'm also going to show you the proportion of new companies coming onto the stock market through the IPO process, the SPAC process, as distinct to the IPO process as well. So I also want to show you that. So ultimately, the investors want access to that. That's what they want to do for sure. They want to be able to do that as well. And then in addition, of course, what does the target company want? Well, this is interesting really, because I haven't really spoken to you much about the target company. What the target company wants is quick and different access to capital. So the type of target company that we're going to be looking for here is going to be a company that's probably very, 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 very quick to be able to, not that it needs, it's going to be very quick. It's a lot quicker to go through the SPAC process, which might take 3 or 4 months or 6 months, rather than the IPO process, which could take maybe 18 months. That's the difference. So what they want is they want to de-risk and shorten the IPO process for themselves and get access to money. And of course, it's not just access to the money, but it's access to that pool of investors who have got a higher risk profile. Just taking a look, they're over there on Twitter and on Instagram to make sure everyone's okay. So what they want to do is gain access to those investors with a higher risk tolerance, and also ones, of course, whereby they are getting early access to maybe companies that are quite disruptive and where they're not mature companies. But on the other hand, they're in a listed liquid position, which of course it offers them more capability of getting out rather than going in through VC, as well as if they go through a SPAC, then they can get out before the target company is even identified, and then there is the rate of return there that is pre-agreed from earlier on. So from that point of view, there is what's called an infusion of capital to a broader universe of startups and other companies, which then fuels innovation and growth. Now, you might say, but who are these investors? Like, who are these guys? Like, is this, Mary and Jack, who are these people? Traditionally, these have been institutional investors. That's traditionally who they've been. And if I was to delve down even further, I would say, apart from institutional investors, you're typically likely to come across hedge funds that are specialized in this area. That is who it is. This is not exactly your ETF market. Over here, then I see 2 questions have come in. One is from Diane. When do you sell the share and keep the warrant? And Matt then asks about DWAC. Again, DWAC is certainly one that I'm going to talk to you about later on. You're not the first person to ask about that in this show. And indeed, I'm sure there's going to be lots of you talking about that over the next while in any case. Despite the rocky road, that SPAC went through a meteoric increase in value, in price last week, and not so good today, but we'll talk to you about all of that as well. So Diane says, when do you sell the share and keep the warrant? Now, you can, over here, in here, right? So remember, these are typically institutional investors at this stage, right? This is when the IPO actually is decided is going to happen. Sorry, hold on 1 second. Let me just go back there 1 step. This is when they're going to actually take the money from the IPO and put it into the target. That's what's going to happen. At that stage, you could decide, okay, I'm leaving here, I'm withdrawing, I'm redeeming my funds, and I'm getting out of here. I don't like what the target is doing. And that's a key difference, a key difference in the whole design of a SPAC as distinct to what happened in the early 90s. So it's at that stage, or of course, then there also would be an expiry. What's the word I'm looking for? Not an expiry. Yeah, an expiration date as well on the warrant, because you can't just decide, okay, I'm going to hold on to my warrants forever. There would also be, like there would be the case in an option, of where there would be an expiration date as well. Okay, right, so let's now move on and let's just take a look at the growth of this area in recent times. Okay, actually, sorry, before I do that, what I'm now just going to do is, because you are asking me about individual ones, before I go and I talk about the market more generally, I do want to kind of address that first. Okay, so first of all, I'm just going to take a moment here. And I'm just going to get my system set up here, so just give me 1 moment for that. Okay, so as you can see, we're now over here in the system, in the VectorVest system. So what I'm now going to do is I'm going to lead you to the place where you will find, if you're in VectorVest, if you're a subscriber, follow me very closely and I will show you where there's a treasure trove of information all to do with individual SPACs. I'm also going to show you where there is a list of SPACs that you can consider, and I'm also going to show you how you can dovetail in and double click in and find out a lot more information. If you're not a VectorVest subscriber, stick with me. I'm also going to give you a resource that you can look at too. Diane says, thanks. Diane, you're super welcome. Of course, you're super welcome. Now, let me just show you right over here. Can I also, will those of you who are VectorVest subscribers, will you just tell us there will you just tell me there who you are, and just tell me if you're a member of the VectorVest community already. Tell me if you're, I see there, Matt, I see there that VectorVest is saying to you, that might be Joy, that could be Glenn. I mean, that could just be, that could be any one of the great team we have in North Carolina. We recently did a video on YouTube on DWAC. Please check it out. Actually guys, would you mind popping that link into the chat? And, oh, it's Glenn. Glenn says he's a member of VectorVest. Do you know what Glenn told me one time? Do you know what he told me one time? Glenn told me that if you scratched him, he would bleed blue. That's what he told me one time. Glenn, I'm going to be talking about you again in a little while because of another reason that I'm going to keep to myself right now. So yes, if we could please, I would really appreciate, Glenn, if you could pop the link there into the chat. So let me see. Diane says she's a member. Matthew says Matthew's a member, Lee is a member, William's a member, Donald is a member, Sue is a member, Sunils is a member, Edward is an old-time member from Ventura, California. Then I see now Glenn is asking Joey. You see, we turn to Joey for so many things. Ash is a member, Regent is a member. Okay, great stuff. Now, here's what I'm going to do is follow me closely now, right? Follow me closely. Here is exactly how you do what I'm about to show you, which is where I will reveal where an entire list of 81 SPACs are listed and analysed on the VectorVest system. For any of you, Erla says, Erla is new. You're very welcome, Erla. Aaron is a member, Innate Wisdom is a member. Wonderful, wonderful. Okay, so what you do now here is that I'm going to ask you to come over here to Viewer. Okay, in here in Viewer. And as you can see in Viewer, I can see a list of stocks that are viewable. Okay, so I can see trading system viewer, stock viewer, watch list viewer, industry viewer. That's where I want to go. Industry viewer indeed. Now also, by the way, for anybody who is new, if you would like to take a trial, you are super welcome to do that. It's $9.95 to try it out for 30 days. And again, Glenn, can I just ask you, would you mind putting the link for that into the chat as well, so that anybody who is new can get a trial for $9.95, please. Okay, thanking you. Okay, and there's the link for DWAC there for anybody who's interested, and I know that's quite a number of you. Okay, so I'm going to go over here to Industry Viewer. Okay. Now, here's what I'm going to do. Is generally when you look at your Industry Viewer, it is going to be ranked by RT, and that means that it is ranked in terms of speed. That is, RT looks at the direction of a stock, its magnitude and its dynamics, right? So that's the way in which this is actually analysed in the first place. However, what I'm going to do is that I'm going to ask you to come over here and I'm going to ask you to click on Industry so that we can rank this entire list alphabetically. Now this is starting at the bottom and working up. I'm going to change that around. And great. So, by the way, guys, thanks a million to the team, the production team there. I see that we've got the link for DWAC. We have the link for 30 days, and we also have another link. Cool. Thank you very much indeed, Joey and Glenn, for that. Okay. Is everyone with me? Everyone with me so far? So where we are now is we've got into the Viewer tab. And when we went into the Viewer tab, we specifically clicked on Industry Viewer. And then what we did is that we listed all of the industries in alphabetical order. Okay. Now, what I'm going to do is I am just going to also make sure that if you look at this, you may only see about 20, depending on what the number up here is, that will determine how many industries you can view. I have changed mine to 110 because within 110, we get down as far as F. And when you do that, scroll on down then here with me. Okay, so go on down here with me. I'm going to go all the way down here to F. F is for finance. And I'm going to keep on going. F is for finance. Okay, here we go. There we are. Just before we get to food, you can see here we have SPACs, financial SPACs, right? Now, you can do one of two things in order to get the actual list involved here, okay? So you can right click, okay? You can right click, which is what I'm going to do, and I'm going to show you what to do next. Or you can double click. If you double click, the list of stocks will appear, or else I'm going to right click, and then I'm going to click View Stocks in Industry Group, and then the stocks in the industry group appear. So there we go. We have Yellowstone in here. We have, and all of these are ranked in terms of VST. Okay, so I can see these are the top 20 out of the 81 SPACs here that I have found. And of course, if I take a look in here for DWAC, there you go, I will be able to find it. Okay, and let me just go back up there. There's been a couple of others. I'm just going to go back up there through the chat. Any other ones that you're all looking for? MMAT was another one that people was looking for. MMAT, there you go, metamaterials. Okay, MMAT is up here too. Now let me go back up again. Who else have we got? AMRS. Okay, okay, there you go. We've AMRS. FAZE, let's go there too. FAZE, we don't have phase. Okay, we can sort that out though. BRPM. No, we don't have that one either. We can again sort that out. That's a simple thing to do. It's a simple email into VectorVest to get that up and running. Now, where else we OCGN? There we are. And yeah, that's it. Yeah, I think that's it. Okay, so as you can see there, they're all there. Okay, they are all there. Now, what about if you say to me, what about if I'm not a VectorVest subscriber? Well, then what do I do? Well, I want to take you over here, back over here to my screen here for a momento. Okay, so what you can do is you can go to, I'm just going to give a shout out again to the guys, Joey and Glenn, would you mind putting the link for the free stock analysis, please, into the chat? So I'm going, sorry, this is the Belgian site. I was in Belgium, by the way, last weekend. We were over meeting with everybody at a show. It was super to see everyone again. So I'm just going to go over here to VectorVest.com. And there we go. Okay, go to VectorVest.com and then we're going to go in here for free stock analysis. Page not found. Okay, let me just Google this. Google.com. The guys have it already there anyway. VectorVest.com. Stock analysis. Analysis. There you go. Okay. So what you can do, for example, is if you are interested in DWAC, that's where you can go. Okay. There you go, Digital World. And then you can put in your email address in there and then click yes here if you want to continue to hear updates from us and press get report. Okay. And you can get 3 of those today, up to a maximum of 9. And of course, the way to get everything is to take a trial for $9.95 for 30 days. Okay. And if you have any other questions on that, pop them there into the chat. We're always happy to see those. Okay. Now, let's now talk, before we get into the individual ones, let's now talk about the growth of this area. Okay. So I'm going to go over here and I'm going to go to a site called SPAC Analytics. I'm able to say that word when I'm able to say that word. So there's SPAC Analytics, and let me just take you through a couple of things over here, right? Over here on the right hand side, and this goes back to whose question now. Let me just go back here. Who was asking me this question? Was it Diane? No, Stephen, was it you? Yes, Stephen was asking about units. So over here, I'm going to just show you, let me just click here and I can zoom in. Okay, so here are the top performing SPACs. So you can see here we have Iridium, DraftKings, Primoris, Betterware, and you can see the unit return then over here on the right hand side. Now all of those you can analyze in VectorVest, all of those. So I can go right in here and I can take a look at DraftKings or Primoris or Betterware or whoever. So I can go and I'll do that. I'll do that for you within the episode as well. I'm just going to check here, just making sure that you're all okay. So I can take a look at those. They're the top performing SPACs. These are the recent SPACs then over here. So you can see Global Technology, Thrive, Enterprise 4.0, Sports Map Tech, Excel, Fin, Go Green. I'm thinking that's something to do with ESG. Blockchain Moon. I'm thinking that's something to do with technology. You see where I'm going with this. So you can see here the way in which all of this works, and you can see the returns as well. So they're the recent SPAC performance. Now, here though is where I want to talk you through what's actually happening right now. By the way, I might just ask again, can I just say over there to you all, because I'm taking a look here at the chat, can I just ask, is your interest more so in the general way in which SPACs are developing, or would you prefer if I spent more time in the VectorVest system talking through individual ones? Because I can do both, we can also talk about what's coming down the tracks, like what type of new SPACs are coming down the tracks and what type of technology and ESG they're suggesting that. So you might just let me know, are you interested in the general environment, which I'm happy to do, the more individual context of individual SPACs, or taking a look at what's coming down the track on a future basis? Pop it there into the chat there as we go. Of course, any of you who's not watching this live, I won't be able to respond to you during the episode, but of course we always can in the comments afterwards. So that would be interesting to see. Okay, now SPACs seeking acquisition. So this is okay, in equivalent terms, this is step 5. This is, Donald here is interested in general. Thank you, Donald. That's what we're going to do right now. So over here in the case of 5, we have searching for the target company. Okay, so I'm just going to close that down. So searching for a target company. So that is up here, right? So, and right now there's 497 SPACs that are seeking acquisition right now. So there's 497 with $140 billion chasing a target company. True story. So there you go. That would just tell you the amount of money that is in this area. Now, down here, we have 116 SPACs that have announced the acquisition. So this is where they have announced who the target is. So this is, if we could pop back over here, this is our step 7 here. Oh, sorry, step 6, I should say. So this is where they have decided on the company, startup co, and they negotiate the acquisition terms. So it could be step 6 where they've announced it, and at this stage, of course, they could have gone on to their shareholders, or maybe not. But it's around that kind of phase of the process. So it could be step 6 or step 7. And then, of course, we also have SPACs completed their acquisitions as well. So that's 427 of those. So this is where you have 427 companies that have actually gone ahead and done this. So you have 427 companies, and that is where we are at level down here. Okay, this is where they've been buying the company and potentially merging as well. So this is where you can see step 8 leading towards step 9. And let me just take a look over here now. So Donald says general, region says individual, Erla says general. Okay, Matt says SPACs approaching merger. Yeah, so the SPACs approaching merger, that's right. So the completion, or the actual target has been complete. Okay, let me go back over here. And then of course we have SPACs liquidated. So this is where the SPAC has now basically given the money back to investors. And then finally, this is the SPAC IPO pipeline. Okay, so this is the IPO pipeline. This is way earlier. This is way back here, and this is step 2. So this is where companies like Emma who launches MCore, who files to go public and goes on a roadshow to find investors. This is the pipeline that is getting ready for that process. So as you can see, I mean, the money is big. The money is big. I mean, we're talking here about like $289 billion among all of this, but the numbers are small. The actual numbers of companies are pretty small in the grand scheme of things. Now, what I think is an interesting thing to do though is to make 2 comparisons. Number 1 is to compare against the IPO activity in the US. And if you look at this for the first time, this number here jumps right out at me here, right? So this here is the SPAC percentage of all new money that is coming into the stock market, either through IPO or SPAC. So for companies that are now listing on the stock market, how many of them are in terms of proceeds, how much money, sorry, let me explain that differently. So when it comes to the amount of money that is coming into the stock market through an IPO or a SPAC, so new companies that are bringing new money in with them as opposed to existing money that's moving around, is 51% of that money in 2021 is through a SPAC. That's the first time that balance has been tipped, and that really is that's a statistic that are often quoted. And then, so as you can see, this is the biggest percentage. I mean, this is a much bigger percentage. So you can see here the IPO proceeds versus SPAC proceeds. So 137 billion. This is 137,000 million. And over here, then we can see that the IPO proceeds were 268%. So little over half of that has actually come through a SPAC, as distinct to the typical IPO process. And as you can see, in 2020 it was slightly lower. Okay, so it was slightly lower here, but at 46%. But it's under, if you look at the years before that, like 19, 17, 20. So about $1 in 5, like $1 in $5 actually came through a SPAC, as opposed to up here 1 in 2. And before that, it was in single digit figures. I mean, all throughout there, the middle of the middle to the early part of the decade. And then of course, if we go back to 2008 and 2007, over here, then there were much higher numbers, and of course the whole risk appetite and the whole trust and so on like that changed along the way. So that's one statistic that I wanted to draw your attention to. But the other one is over here, is simply the numbers, is just purely the numbers, because a statistic that's often bandied about as well is that in 2020, SPACs accounted for more than 50% of newly publicly listed US companies. So that is true in terms of number of companies. If you look here, SPAC IPOs was 248, which was 55% of all US IPOs. But as you can see, that number has now jumped up to almost 2/3 of new companies. So there is really, really, really a huge amount of growth that's happening here. And I want to tell you why. I do want to tell you why. I think that that's important. So I'm going to tell you that as well. But before I do, I want to go back over here to our audience and see what you are saying. So Stephen said, would it be better to look at the SPACs that are deeper in the pipeline? Okay, so it depends who you are, Stephen, really. If you're somebody that wants to, buy a SPAC from the point of that is already listed, as distinct to maybe an investor who is buying before the target is identified, well, of course, that typically, as I say, has been the preserve of institutional investors and hedge funds. Now, there's ways and means, of course, to getting towards that. You could be somebody that is a qualifying investor to invest in a hedge fund directly. You could also be buying some listed hedge funds. I've done that myself in the past, who themselves are then buying SPACs as well. And then, of course, you can buy SPACs that are more mature, where the target company has been announced and where they are listed on the stock market right now. So it just, like, there's different choices there. Don't be limited to what you just think is immediately available to you, because I could definitely pull up, like, I mean, if I was to look for here, listed exchange traded hedge funds, for example, hedge funds over here, I could do that, and I might, like, there you go, there's a range. There's a range there of those that are exchange traded as well, that could themselves be investing into SPACs. So it wouldn't just be limited to what you've seen. Let me see what else we got. Now Edward said it feels like being a venture capitalist angel. Okay, let me just very clearly specify every word of that, Edward, because it sounds like you're familiar with that terminology. Maybe not everybody is. Right, let's say my name is Susan and I am going to set up this company, and I am going to, what am I going to sell? I am going to sell pens. I'm going to sell here pens, and however, in order to really scale up my business, because I think this pen's totes amazeballs, I think that I am going to brand these pens. I think they're very good quality, and I think that they're prestigious. So that means that I think that anyone who has a pen like this is going to feel better about themselves, and there's going to be some status. And by the way, of course, companies like Cross or other companies have actually, gone ahead and done that. Filofax. Is anyone old enough here to remember them? Those types of companies have done that. Now, I can't do this alone. I have to pay for products, I have to pay for marketing, etc. So what I might do is go out and seek early stage capital, and that then, Edward, that could be the situation then that I could be in, whereby I would be looking for early stage capital, and that would be angel investing. Now, as I go on then, at that stage, I might, I'm getting good traction, and I really think that I'm doing really well here. I think that there's lots of people who want my pens, and now I want to scale up and I want to launch my product, not just here in Ireland. I'd like to go to the States. Then I might have private equity money. So this then moves me on a stage, or we might call it seed, or we might call it Series A. But all of those are basically cognizant of the stage that my business is at. But at a later stage then, I am now going to take on the world. I'm going to be distributing into all 5 continents. I'm going to have manufacturing centres in 3 different continents. We're going to really increase the amount of people that we're going to have. The business is now moving into either a very, very high growth stage or moving into maturity. And I want new money to come in. But I'm not thinking about listing yet. Then I would be in the venture capital space. That is what that would be at that stage. Okay? So Stephen says, I knew this was a trick to sell his pens. I put down the pen. But I bet you Stephen, I bet you I could sell it though. Anyway, so my point is that while you are correct in what you're saying, it's like taking a stake in a company at an earlier stage than when they're fully public. It's also just important that I distinguish the different elements of what you were saying so that people understood the nature of your question. Let me see now. Yeah, I agree. Lala's right. In Age Wisdom says DWAC just made the list of the top performing, did it? Top performing SPACs. Let me just refresh my screen here. Oh yeah, sorry, yes you are. Yeah, you're right here indeed. The unit return at the moment is 794%. Yeah, and let's talk through that. Let's talk through that one. Thank you indeed, Innate Wisdom, for that observation indeed. Now, what I also thought would be interesting to do is I'm going to talk about the man himself. And that is, of course, Mr. Glenn Tompkins here, because he produced a video in March 2011. March 2021. Sorry, Glenn. And on that one, as you can see, he referred to SPACS analytics as well. And what I just wanted to do was very briefly show you what's changed, right? I just want to show you what's changed. And by the way, if you go through that video, now it's a short one. It's about 14 minutes. Is it 14 minutes, Glenn? Yeah, 14 minutes 52. There's some really great Glennisms in there. Like, how do I spell this, Glenn? How do I spell this? I'm pointing to him here because, you know, I can see the chat there on the phone. He refers to rock and rolliosity. So I think that this is the velocity of one's ability to rock and roll, right? So what it basically means is how fast it's moving. But over here, if you take a look at, I'm just going to play this without sound. Okay, I'm just going to play this without sound. And I'm just going to show you here is that up here, you can see, for example, DraftKings, Iridium, the 2 of them are still very, very high. Primaris, you can see that's up here is very, very high. But look at the numbers of, oh dear, he calls it a spectacular. I was expecting, you know, kind of spookiness, like Halloween kind of thing going on at that stage, but no, it did not. Just give me a moment there now so we can get back here. Okay, and if we also just take a look at, let me go back over here. Yeah, right here. Is that, now I'm going to pause it here, is look at that time. Look at the proceeds. Look at that stage, there was 392 companies. 392 companies at that stage. Whereas, oh dear, I think I might have to bring it up here again. So SPACS, analytics, yeah. And here we go. So now there's 497. Another number that he has up here is that there was 108 which had announced theirs. It's now up to 116. The completed acquisition back then was 285. It's now up to 427. So that will just show you in that period of time how much has changed and how much action is behind this. Here he has it up here now. Rockaroliosity. And he actually has a spelling for it. Thanks, Glenn. And then he says, none of my videos are short, lol. There was one video we did together and I think it was our longest one ever, all right, yeah. The longest version of that episode of that show. I can see why. In a good way. Okay, then liquidated was still 90, is it now 91? No, it's still 90. Okay, so that hasn't changed. And the total there was 875 with proceeds of 226 billion. That is now 1,130 with 289 billion. Like, so you can see that there's 3 billion of movement happened in that period of time. And I just see one last statistic can I see there from his video is, yeah, at that stage as well, it was 46%. 46% of proceeds was in 2020, and it was up to 74% at that stage in 2021. So you can see how those numbers have changed indeed. So if you just look, I literally have them in the perfect spot there, haven't I? This is exactly the way Glenn looks most of the time, isn't it, Glenn? Okay, now let's move on from there then, and let's pop back on over. Let's go back over here to our VectorVest watch list then, and let's take a look at what is going on. Okay, Right, let me go back over here then to the program. Okay, hopefully at this stage, if you haven't got a subscription to the system, is you have done one of two things, is that you have either gone ahead and taken a trial so you can get access to this, or what you've done is that you have gone to your free stock analysis and you have got a stock analysis report of one of the SPACs that you might be interested in. All right, so up here, as you can see here, we have Yellowstone Acquisition is the top SPAC when it comes to from the point of view of VST. We have Sports Ent Acquisition over here at a VST of 0.91, and we have Altimeter Growth then over here at 0.95. So what does VST mean? Well, VST stands for value, safety and timing. So value, safety and timing, what that refers to is, number one is value is a stock's long-term price appreciation potential. The S over here refers to safety, which specifically refers to a stock's consistency and predictability of financial performance. And then T is relative timing. Like I told you earlier, T refers to a stock's direction, the magnitude of that direction, and the dynamics of its progress along the way. Okay, so that is VST. That's when you put all three together. Now, I might instead not be interested in value, safety, and timing. Instead, I might be simply interested in RT. What are the fastest moving ones? Which is what I kind of get a sense that this audience is particularly interested in. So if I look at the fastest moving, here's what I'm going to get. I am going to get over here that we have, no, let me just check. DWAC. Let me just check its RT. Yeah, okay. Okay. I come back to that. I'm going to give you the frame of reference between those two, because you may be wondering, okay, if it's fastest moving over there and it's not over here, what's going on? I'm going to give you a frame of reference for that. But right now, the fastest growing, I'm going to take the top three here: Altimeter Growth, Sports Ent Acquisition, which of course was also one of the top three VST SPACs, and Melikazek, which is yeah, okay, we can see here. So how we know that these are the fastest moving ones is because we can see that the RT is highest up here of 1.36, 1.24 and 1.23. Now we are having a little bit of a kind of a downer day. That's what's going on over here. I'm seeing an awful lot more falls today than I am rises of this particular list. And if I was to go further, get 40. Let's take the pulse. Just take the pulse over here. Okay, let me scroll. Yeah, it's either flat movement or negative movement, predominantly, and particularly the ones at the top. All right, so let's just take a look at the top three here. Let me just I'm going to highlight all of these three. So just in case anybody is getting lost and want to follow me again, what I've now done, I'll just briefly explain this to you. Okay, so what I've done is I when I came in here to my homepage, here's what's going on. Here is what is going on. Is over here. Okay, is that we have got the market here is, I'm sorry now that I can't make this any bigger for you, but the market here is saying that we have a red light in the market, is that the RT, the relative timing of the market, has fallen below 1, and in addition we now have a red light, which means that day over day and week over week the market is falling from the point of view of direction, magnitude and dynamics as distinct to anything else. So we're just seeing a little bit of caution there going on in the market. We've got the downtrend here, which means week over week the market is down. We had a lot of green lights over here over the past 2 weeks. So it seems that the market there is pausing for breath. And we can see the MTI, the market timing indicator, is also lower than every day. 1, 2, 3, 4, 5. Every day in the past preceding 5 days. So that's okay. So fundamentally, sorry, I shouldn't use that word. Overall, the market there is showing signs of a little bit of pressure right now, but let's just take a look at that. Stephen says the RT is most likely down on DWAC because of the current class of value in the overall market. I'm not so sure about that, Stephen. I want to bring in the latest news on that, but I'm not so sure that it's just that. I think there's something else going on. 2 things in particular that I will bring to you, so stay tuned. Okay, so let me just go back over here to, where was I now? Oh yeah, so I'm going to come over here to viewer, down here to industry viewer. As I was telling you, I'm going to rank industry, I'm going to rank all the industries by industry, and I'm going to work there on alphabetical order. And when I right click here on financial SPACs, and I go in here to view stocks in the industry group, and I'm going to scroll over here. Okay, now I'm going to highlight the top 3, 1, 2, 3, and then I'm going to right click, and then I'm going to view the stock graph. And you can't see them because it's not my monitor yet. There we go. All right, so we can see here Yellowstone. You can see here that we are seeing a rising RT, which means that the buyers are winning the battle here as distinct to sellers. So I can see here that the price here has gone from $10 a share up to $10.13. So we can see here that that one has been rising, very young and early. I'm also going to check the volume. Yeah, volume's up around 50,000-ish. Okay, right, let me look at the next one. Oh, big changes have happened here. So this was born on the 14th of April. RT was pretty much, as you can see here, there was a really significant drop. And the stock actually, it seems, hasn't reached back its high yet. But over the last while, we've seen here that there's been a really big jump in the value of that. I wonder what has happened. I can find out pretty quickly for you too. And then Sports Ent as well. I'm guessing that's Sports Enterprise maybe, acquisition. And as you can see here that the RT broke over 1 on the 21st of September. Well, if for anybody who would have been looking at it then, you have been in for a lovely change, because since then the stock has gone from $9.99 up to $11.41. Okay, so again, you can see here that the volume on that now is gone up to over 600,000 shares per day. So rocky, like it's a rocky road, and a very fast moving one as well. Now let's just say though that what I want is that I want SPACs with high, maybe long-term price appreciation potential. I want SPACs with only positive earnings per share, and because I am picky, I also want stocks that have got a growth rate of greater than 10%. Here's what I would do in order to find them. I can close this down. I'm going to go over here now to Unisearch. Unfortunately, for those of you who are not VectorVest subscribers, I can't give you a workaround here, unless, of course, like I say, you take a trial and then you can do what you like. So in here then, I'm going to just build out what I've just told you about, right? So number 1 is that I only want to look at SPACs. So what I'm going to do is I'm going to filter by my industry group. My industry group is going to only be over here, and I'm going to only pick selected industries, and I'm going to scroll down to F. F is for finance, and there's financial SPACs. Okay, the next thing is oh, it's 99 cents for 30 days now. Ooh, okay, well then make sure and take advantage of that. Right, then the next thing that I want is I only want stocks whereby the RV is above 1. I only want stocks that have above average long-term price appreciation potential. Dance with Chad and Breeza. So what is the difference between the 3 trial options? What I'm going to do is, if it's okay, Joey and Glenn, would you mind answering that specific question there in the chat? Because I know a lot of people here are members and they'll know, and it's really important that we get an opportunity to take care of our new member to our community. So if it's okay, could you go in and answer that? Okay. Then I also want earnings per share that are positive. I only want SPACs that are positive when it comes to earnings. So over here, I want the EPS to be greater than 0. You're most welcome. Thank you for thanking me. And then finally, I want over here, I'm going to put in stocks. And this is where instead of, I also want GRT, growth of the earnings, to be greater than 10%. Greater than 10%. Okay, now let's I see the guys there saying the chat feature is very useful. Yes, it is. It is actually, it's very useful. And when any of us go on the website, we're also invited to chat. It's funny. Okay, okay, here we go. There we go. Just like that, I found my industry group. I only want SPACs. I only want relative value above 1. I only want positive earnings, and I only want where the growth rate of the company is greater than 10%. Here, Yellowstone and FS Development. Both of them here, you can see that the RV is above 1. I can also see, yeah, my RSs are okay. Like, then again, if I wanted consistency and predictability, I probably wouldn't really be looking at SPACs. If I wanted dividends, I probably wouldn't really be looking at SPACs. SPACs are earlier stage, and of course the target companies are unlikely to be giving out some of their hard-earned money to shareholders. It's far more likely that they're reinvesting it back in their growth. Okay, so I just want to check, even though I know the system works, I just want to check growth rate above 10% both times. Perfecto. And now I also just want to check that the earnings per share is positive, and yes it is. You can see here my earnings per share is positive. So these two SPACs might fit the bill. No, they do fit the bill. The reason I'm saying might fit the bill is I never say, okay, that's fine, we're done now, let's just go and, you know, make a decision. Is I always look at the graph first. So let me just take a look at the graph. Right, what are we looking at here? What I want to see is the RT being above 1. Okay, we're not quite there yet here. Not quite there yet. It's kind of hovering there around 1. What I want to see is, I want to see this going above 1. It's at 0.99. It's super close, but I want to see that going above 1 before I would be happy to go ahead with there. And in the case of Yellowstone, I would want the same. Symbols. That's basically it. I want to see the same. I just want to make sure that, like, if I scroll right in, and it looks like we've got a doji there today so far, is that so far the stock price today is slightly up. It opened at 10.13. It's, yeah, the high price was 10.14, so it's very, very, you know, it's narrow there. But they are the two SPACs that came up based on what I wanted. Now, of course, I may want something else entirely. I'm not worried about long-term price appreciation potential, for example. Let's take that out. But what I do want is, for example, RT, which is what I have been looking for. So I do want my RT, for example, to be above 1. Be above 1. Over here, 1. Run the search. No results found. Okay, maybe let me drop my growth rate to 5. And I do want a positive company. Now, not everybody would, but just me. No results found. Okay, let's take out the growth rate. Let's take a look. Rightio. So I'm seeing here there's no growth here in these companies at the moment. These could be interesting now. Social capital. Okay, let's just take a look at this then from a graphs point of view. Okay, right. This is interesting for an early stage. It's after coming off a huge decrease there. Let me just go further. How long have I got here? I think this listed maybe in January. Yeah. So we can see here that it's fallen way down. It's 15 down to 10, but now is over here. We can also see, yeah, we can see that it has just broken over 1. This could be an interesting one. Has all of the bad news been washed out of that? This would be an interesting question. And also, if you look at the change in the pace of the RT, we see here that the buyers are putting a lot of pressure on the price at this stage in an upward direction. Stephen then says, what about understanding what type of company the SPAC is attempting to merge with? Good idea. So how we can do that is, let me right click here and I can get a full stock analysis report. And over here then, this doesn't give me a whole lot of information here. Red Ball operates a development state for the purpose of that. Okay, that doesn't give me a whole lot of information. Some of them do, because that may be this one may be pre-identifying its target. Yeah, this one has done the same. Okay, so let me go back to the viewer and let me just right click on this and let me just look at the list of stocks again in the group. Because some of the later stage, like if I just go back over here. And I'm now going to take a look at, no, not going to do that. Going to go the other way. Oh, I want to go back to you about digital world as well, right? So here, for example, in the case of Primorius, sorry, you know what I'm looking for? is, let me just go back over to the ones that are moving fastest. Okay, let me just move over here to the ones that are moving fastest. For example, Iridium, IRDM. Okay. Yeah, okay. Now, and if I right click here and I get a full stock analysis report. Aha. Here you go, for example. Okay. So as we can see here, Iridium Communications is a mobile voice and data satellite communications network. Its satellite network provides communication where a terrestrial, wireless or wireline networks do not exist or are very limited. So as you can see, in some cases, those are in there. Which leads me to now talk about what is coming down the track. Okay, so what I'm now going to do is let's take a look at the tech and the ESG angle in both of these cases. Okay, so what I'm now going to do is I'm going to bring you over. Okay, I'm going to bring you over here. And I'm just going to bring you over this time to back over here to my other screen. Okay. Okay, and this time I'm going to move this over here. What I'm going to do is I'm just going to take you through some new SPACs that are starting off from the very beginning. Okay, so let's just take a look at those. Again, I'm keeping an eye over here. So the iPod SPAC most likely ran up due to the association with Reddit. Very nice, good information. Glad you're enjoying it, Stephen. So over here then, what you can see is a list of SPACs that are just getting started, really. And before I get into the technology here, like when we look at the numbers here, like the massive increases, like why 2020, why 2021? Well, really this comes from three reasons that dramatically ramped up in the last 2 years. Partly to do with COVID, partly not. One of them is the excess of available cash. And you might say, oh really, since when? I don't have that excess. What you talking about? Well, yeah, if you look at quantitative easing and you look at a range of the other money that has been printed into the world environment with a view to, boosting inflation, which is now certainly happening. And when you look at the interest rates that banks are offering, when you look at banks not being able to take on any more capital, when you look at the interest rate between banks in the interbank market that is negative, when you look at all of those things, there actually is a huge glut of money looking for a home that can find a return. The second thing is, since startup culture has really proliferated around the world, I mean, we used to maybe think of just Silicon Valley before. Look at Israel, look at Austin, Texas, look at Ireland, look at Dublin, look at Belfast, look at Shoreditch in London, look at Berlin. I mean, we could go on and on here, couldn't we? About all the various different parts of the world that has a really big startup culture now. And of course, that there is more money chasing that than ever before. There is more access for private investors to become seed investors or angel investors, etc. And of course, the other thing is, which I have referred to now a number of times, is that the regulatory changes from the blank check companies has made a big difference to investors. So that's why all of this is going on right now. But let's look at what it's being actually invested into. Okay, so what we can see here is you can take a look at companies whereby, this is a blank check company targeting media and technology, filed with the SEC to raise up to 350 million in an IPO. Sorry. There we go. Agile growth, targeting technology, blank check formed by the Aon Group, seeking to acquire technology focused businesses with an aggregate enterprise value of 1 billion to 1.5. Let me go down here. Alpha, looking for technology businesses in Latin America. Alpha, which is looking for technology business that will exhibit sustained long-term growth and value creation. Okay, that's more general. Altimar, Chicago-based private equity firm focusing exclusively on investing in North American manufacturing, industrial technology and services businesses. People often think that these will only look for, product-based businesses, but when product-based businesses can be SaaS, software as a service, then this blurs the lines between is something a service or a product. But of course, the real question is it scalable or is it not? So as you can see here, there's a wide range. There's a wide range of different acquisitions, SPACs looking to acquire or seeking to target. And you can see the type of things that they're actually looking for. Here's another one. Archimedes, targeting AI, cloud and auto tech. And let me also see down here, we have another one looking for aerospace, satellites, space exploration, quantum computing, chemistry, artificial intelligence, machine learning, cybersecurity, blockchain, digital currencies. Another one down here, technology enabled consumer products and services. So like all of these, none of these are cheap in order to develop the offering. And that is exactly what a blank check company, or again, a SPAC is better at finding. But if we switch from tech to ESG, because as you know, the name of the show is the ESG and Tech Show, and it is important, it's really important that we look at both of these, is that over here, Reuters had a piece recently that SPACs target more ESG companies in 2021. So down here, this was produced quite recently, and that is 49 US SPAC deals involving ESG in 2021, and it made up almost 15% of all SPAC deals this year, and that was by May. But in particular, what I again want to do is that I want to show you a comparison. So the sectors that are coming out there: environmental technology, weaving ESG and tech together, transportation, industrials, water and energy. So putting all of those together compares with 40 in the second half of 2020, and the value of all deals is more than 2.5 times that raised in 2020, and accounts for 38% of the total SPAC merger volume, up from 25.3% in the second half of 2020. So as you can see, the growth of SPACs is really big. The growth of SPACs targeting technology is massive. And of course, the other area that deserves mention is SPACs focusing on technology and ESG. And in my opinion, that is exactly where the sweet spot is, which now leads me to how you can find them. How exactly can you run a screen in order to find them? So this here is called SPACtrack.net. So SPACtrack.net. So this site enables you to look through various different SPACs as they're developing, but where you can target specifically sectors, right? So you can look at, so you can see here, just again, you can look here for a well-known sponsor, or tech, or fintech, or energy, or sustainability. I found 13 specific ESG ones. And of course, if you haven't, please do sign up for VectorVest.com/FFF, because again, guys, sorry, would you mind putting that link there into the chat? That is where you will get the follow-up email with all of the resources that I have here. You get all of that. You get the follow-up email right afterwards, when you will get how I built what I built in the video, the unit search that I built, and you'll also get all of the other analytics, and of course the link to Glenn's video as well back from March, so you can make a comparison there in between the two. So down here you can see then we have a number of them. So we have ARBG, which is acquisition, which I showed you already. Now it's not very easy to see this because of the way that the text is on this site, but SPAC track is the way in which you can do this, and you can find the value, the market cap, change over the day, the warrant price, the unit warrant details, the lot. Okay, so you can decide, you can take a look at all of that. There is more detail I could have gone into about, you know, warrants and how much can be redeemed, and percentages of how many have redeemed over the past while. And I'll just give you one statistic on that. 80% of SPACs between July of 2020 and March of 2011, 80% of those SPACs experienced redemptions of under 5% in the US. So you can see, like, all of that is changing relative to what it used to be like when the figures were much higher. And you know, obviously today isn't a full day long course about SPACs. I have kind of an hour, but I know I've gone well over. But I just wanted to really take you on a good trip around to be able to understand all that. Now, last thing I want to mention, super last thing, unless you guys have any questions, if you do, pop them into the chat super quick so that I can have a look at them over here. If there are any questions at all, please do put them right into the chat. I'm just going to make sure my chat over here is up to date. Yeah, great. So anything else at all you want to know, pop it in the chat, we'll take a look at it. So what I just want to finally tell you about is digital world. Okay, so if you search Trump SPAC today, you'll see over here Trump SPAC slumps after a wild week of trading. I'm going to go back to another one now, and I also see why retail traders are pouring into this. And let me see here now. Let me see. Yeah, there's two reasons that it seems to be why. I'm trying to find both of them. Two reasons that it seems that the Trump SPAC has slumped today. And I'm going to go over here and let's take a look at the I'm going to take a look at it over here, and over here on the actual stock over here. Okay. So what that is, that one of the reasons is that the stock was up 800% 2 days last week. 800%. That's a lot. So there was a really massive rally. So you can imagine like what that was doing to, and not just to the RT, but to the volatility of the stock. And so it does look like that there has been some short selling that has gone on today because of that meteoric rise. And I just want to find that for you because I had that for you just before we went live. Yeah, this one, here we go, is that we Trump SPAC targeted by short seller iceberg research after massive rally. Now, like, a short seller may have reasons to be bearish in the stock, or else we'll just see, right, there's been a massive increase, so therefore I'm going to go in and I'm going to bet on the stock is going down. So that is one reason. And then the other one is about the merger with its social media site as well that Trump has put forward. So you can see here the SPAC skyrockets as much as 1600%. Sorry, I'll move that up a bit. You can see like that the amount of change in this price has been absolutely massive. So I just want to be able to find that. Yes, here we are. Okay, so 2 stocks linked to Donald Trump dropped shortly after the ex-president detailed plans for one of the companies, and the other firm said it would sell additional shares to Ware Capital. Okay, and there you go, DWAC, which is a special purpose acquisition company, plans to merge with the new social media, Trump Media and Technology Group. So as a result, here's where you're going, is that of course the target now has been identified in this way, and there's also lots more going on there. So there's loads of news. There's loads of news. But I do want to actually give you the context. I want to give you the last piece of context here for why the RT is low. Well, it's below 1 in VectorVest, as distinct to it being one of the fastest movers over here on SPACS Analytics. And that is if I right click on the stock graph. Stephen says, great information, he'll try the trial. Wonderful, we'd love if you tried the trial. Welcome to the community. You can see here, it's because of the change in price, and it's because the price over here, you can see that the price here has actually fallen below its stop loss. So the stop loss is the blue line. And how do I make that stop loss bigger? I need to right click on it, and I'm going to change the style, and I'm going to make that style much thicker. There we go. Okay, there you go. So you can see that the stock, and this is the stock price, this is the candlestick. So you can see that the price actually has fallen below the stop loss. That's the reason that it has a sell recommendation up here. We can see that the price today has increased. It's opened at 60, it's up to 62.38. It's a wild one. It really is a wild one. And we can see, of course, the RT is now rising from 0.55 up to 0.69, which is where it was. So our RT, remember, looks at a day, a week, a month, and a year, whereas what I showed you on SPACS Analytics looks at relative to the unit price. Okay, so to the unit. That's why I wanted to point out the difference between the two. Okay, so I believe that we have now gone around the world of SPACs, and it didn't even take 80 days. So thank you very much indeed to everybody who has been engaged here with us. We have gone through exactly what a SPAC is, and why it exists, and how it's different to a blank check company of the past. What we also did then was we went in and we looked at how to find a list of them on VectorVest, and then from there then we looked at the general growth, and again the rationale behind that. From there we went back over then into the site, and we looked into the program, and we found individual SPACs and why one might be interested in looking at different angles of that. We built a unisearch, and then in addition what we did then was that we looked at what technology is being invested in, the statistics on ESG, and of course I knew you'd all be asking me about digital world, so I wanted to finish up there on that point. I'm popping over here, just take a look at the comments. So Stephen says great information. Oh yeah, sorry, I said that already. Edward said awesome info, thanks. Regin said thanks Susan. Diane said thanks, very good info. You are all super welcome. And before you go, can I ask you to please like the video, and please do also subscribe to the channel. There's loads of great content that's always here so often. I'll be back with you again this time next month when we'll talk about lots more to do with ESG and technology again. And of course, another thing that you can do, if you would like to share this, Glenn calls this sharing it with your social circle. I'm just going to say sharing it, is you can also, of course, press the share button, and if you have any WhatsApp groups where you think people might be interested in this, forward it on there too. So Donald says, will be interesting to do some, I imagine you're saying research there, Donald. We'll be back testing. Very good. You do that. Absolutely go for it. And on that note, to each and every one of you, have a lovely Wednesday. Have a lovely week. Have a lovely Halloween, of course. And I will see you back here in a month's time. Final thanks goes to Joey and Glenn and all the team producing this from North Carolina. But here, live from Dublin. Thank you, everyone, and goodbye.